multifamily is great, but it's not for everyone. I think people have realized like
Yeah,
this is not like the perfect thing for every single investor and whatever
yeah,
their needs. What I like about it, for me, what I'm very knowledgeable about at this point, and I like it in terms of appreciation of my capital, but I'm not looking for that as my main kind of cash flow coming in, which I know is kind of what was
yeah.
sold.
It can be long. Can be long time in between the cash flow, especially if you're doing
Exactly.
a large
Exactly.
value add project, or the rents aren't coming up as quick as we have seen.
Yeah.
It's a slow and steady. It's a long strategy. Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you on yours. Welcome to the Yacht Captain Investor Podcast. I'm Scott Kidd, and today I have the pleasure of having Misha Kaufman on of Craft Capital.
Yeah.
How you doing today?
Oh, I'm doing great, Scott. Thanks for asking. How are you doing?
Oh, I'm doing great. I'm really happy to be here. Excited about our conversation.
Oh, me too.
For people that haven't met you before, just give us a brief intro about yourself and what you've been up to.
Yeah, for sure. I got a couple pictures in the background to kind of walk you through it. Over here is a picture of me as my 3-year-old self. You'll see kind of two people in the background. It's really far away, but it's important to kind of understand where I come from. So I was actually born in St. Petersburg, Russia. I was born in an orphanage there. Spent the first 3 years of my life, in that system. And then my mom saw a fax, a picture of me, flew from the United States over to Russia, stayed there for over a week, getting all the paperwork, everything set to come together to bring me to the United States. So that's kind of my start to be in the United States is through that process. We spent most of our time in Colorado and Massachusetts. And in Massachusetts, my dad, his family has been involved in multifamily for a long time. So his father, kind of during late 1930s, was buying apartment complexes in New York City. So you can imagine kind of holding that through a long period of time. They built in a good amount of wealth. And then during my time in Massachusetts, which was kind of right after 2008, my family started accumulating a lot of multifamily properties as well. So I wasn't involved in it. I was kind of more observing it. I was going through my day-to-day life. So my day-to-day life was the more usual, focus on school. I know your kid's about to go to college, so that's where I was when they were acquiring stuff. But at that time when I was in high school and middle school, like I had one kind of obsessive goal, and that was to go to an Ivy League school. And I was fortunate to get accepted. That's kind of the picture right behind me is my diploma from Columbia University, which was just very meaningful to me because I had that goal, I had that vision. At that particular moment in time, I think I was a C student my freshman year in high school. So you can imagine kind of the turnaround and the effort and energy that goes into going from there to being able to have opportunity to go to a school at Columbia University. And it was at that time at Columbia University that I got more interested in two different things. One was financial literacy and kind of ancillary, the real estate path that my family was on. The second was teaching. So I started a program that kind of combined those two things called Sensible, which was a financial literacy nonprofit in New York. And I learned a lot from that process. We taught financial literacy to different schools in the area. And then I took that and parlayed that information to do a program called Teach for America, where I came into Oklahoma City and taught for 3 years reading. That whole time, though, probably I would say about my sophomore year in college through to Teach for America, I started investing the very small amounts that I had into multifamily properties that my family's had. So I started to actually, figure out how to live on a very small budget, invest the rest, and accumulate a decent portfolio indirectly, completely passively, while I was teaching fifth grade reading and writing in Oklahoma City. After those 3 years, I went to business school, and my family tapped me on the shoulder and they said, "Hey, like, we want you to come in and actually learn this business for real." I said, thought about it for a little bit, and I said that is something that I would love to do. So I started from the ground up. They gave me I drove from business school to Ohio, which I know you're familiar with. I know you got some property
Yes.
in Ohio. Columbus, Ohio, 300 unit property. I started as a porter. So for those of you listening, a porter is a person that's picking up trash at the community, right? So start my day, get in early, go around, make sure the grounds are looking beautiful and clean. That's what I did for the first kind of 2 months of my property management journey. From there, I graduated to really, I wouldn't say directly, but I kind of got to observe the technician and maintenance process. So seeing them, how they handle work orders, how they communicate with residents, how they do their preventative maintenance. And I did that for another 2 to 3 months. And then I graduated to leasing. So I leased at that property for 3 or 4 months, kind of learned the ins and out of that part. And then I got the opportunity to be a manager. So we had acquired a new 90 unit market property in Columbus, Ohio. And they said, "Hey, like, try it out." So I managed that property. I think when we bought it, we were like 85% occupied. I brought us up to 96% occupied, and also kind of changed our marketing strategy. So like in Columbus, Ohio, that's where the university is, Ohio State University. That's kind of where your better paying residents are. We were located in Grove City, which is a little bit outside of that. But rather than kind of marketing to Grove City, I was like, hey, let's use Facebook in our marketing to advertise to Columbus, Ohio residents, because we have these unusual townhouses that there's an advantage to them seeing. So what happened is we were able to get people in at a much higher price point than the submarket of Grove City, which helped bring our NOI and revenue up. So that was kind of my graduation for me moment. So once my family said, "Oh, like, you can actually not only do this without having that whole background that most people have, that we see the value in what you could potentially offer." And then from there, I worked essentially full-time with a property management company in Texas. So they brought me down and promoted me to a district manager role. So essentially at that role, I oversaw 1,000 units in the DFW area, or really DFW to Waco area. In that process, I was managing the managers. I had my team of 5 managers, make sure they have the strategy and everything developed for those properties, the budgets, handling all the resident phone calls, handling, hiring of the maintenance staff, all of those different parts is what I spent the last kind of 4 years of my life doing, which was incredible, right? To have like kind of a teaching financial background, but very theoretical from business school, to like, this is how it works in practice on the ground with people, in this industry. It was invaluable. And I think I learned more from really the people that I worked with than anything else, because that's where the rubber meets the road. It's like, how do you get the right people? How do you motivate them? How do you execute the business plan? And it's a people business, very, very more so than anything else. It's such a crucial element that Scott, I'm sure you see, and with kind of what we do, like, very numbers focused people are in this business, but you gotta have like the people side too, or you're not going to get the results that you're looking for.
Yes, without the people, you don't have you don't have a business, really.
Exactly.
Without the people, you don't have a business, really. But I see you kind of did more of a trial by fire, on the job training, which I think that's the best way to do it, because you already had the knowledge base already, but then you were applying everything. Are there any, because I know AI is becoming a really big thing now. Are there any AI tools that you use that have systematized and have optimized a lot of your business?
Great question. The answer is yes and no. So just to give you the kind of the final backstory why it's a yes and no answer, is because I left my particular role as a district manager in August of 2024. And the AI boom that we're seeing kind of came right after that, or a little bit after that. So in the role that I play now as an asset manager with Craft Capital Investments, we do use AI very extensively. More for, I would say at this time, more from the marketing standpoint, making sure our outreach is there, making sure our communication messages are clear, all of those parts. Our funnels are in place, communication with potential investors. But the nuts and bolts of our business, at least for now, are still very much wedded to like being on site, seeing what's happening on the ground, making sure that people are doing what they need to do. But that's more just because our business model is focused on properties directly in DFW. Now, if we had a portfolio similar to yours, right, where you're in a lot of different places, I think we would want to incorporate some more AI data specific tools to just kind of alert us to what's going on quickly.
Yeah, I think I see it. I'm seeing it more and more, especially in the property management space, where you can optimize because you have all the data.
Yep.
And with that data, it gives you like a, really hands-on of what's actually going on. You are seeing what's happening to everyone on the day-to-day in America, really what's going on. The real estate's local, but you have with you having so many different units in different areas, you have an idea of what is actually going on there, what people are spending their money on, what they're struggling with, what they're not struggling with, and you're going to be able to see where you can put the rents, where, what other services you need to offer, what other, what other processes you need to put in to make a better experience for the residents. Because, if you have happy residents, you're going to have happy investors, right?
And I've heard of a lot of different strategy, and it's an emerging space, right? So we're going to see how everything unfolds. But what I've heard that people have done it successfully, a couple of things that they've done is one, used like the management team have used it in their communication. So once you kind of develop a style that the AI kind of ChatGPT you can input, hey, this is how I communicate, but you can start to have those messages with prospects and with residents so that they're getting responses in good time. And that if someone leaves and there's a new person in place, that the communication is still very similar. Cohesive. That AI also can kind of remember specific notes. Hey, that person has a dog that they really care about. Its name is Buddy. They can ask about how their kid's doing at their graduation. Those little elements and pieces that like add a connection and value. I think that's where it will be very helpful. If I was directly involved with my teams, I would talk them through that as well. Like, how can we more personalize our experience for each resident as well as each prospect by using this great tool to kind of remember key information. I think that's where we'll head. And then obviously on the pricing side, I think AI will play a really cool role.
Definitely. I think AI is probably going to have a little more dynamic pricing, like you're seeing with Airbnb, maybe not on so much in that thing, but I'm hearing a lot about like dynamic pricing in insurance and things like that, which I think will be, based on the use of the property and how, just the overall, because they're getting a lot more data from like certain areas have different, exposure and different risks compared to others. So then they can lower their prices compared to other places where the risk is a little bit higher. But one thing I know I would like to see is something AI coming in, or some more, optimization in like title and like transactions, because we're still kind of doing it the same way it's been done for a long time, where you have a title search and, we do have DocuSign, but, you're still going through a huge amount of papers for one particular property. And
some of those stuff, it's like there's kind of guardrails in place where it's like you can't break through the castle. So like, there's the legal part too, but it's hard to get through. I think it can. I think there are going to be people.
It will still need the people. Somebody will figure out a way to optimize it. I'd like to see that too, because then if, just with like the blockchain and stuff, if like you had all the documents for that property readily available all the time, it would make the transaction a lot easier.
Yeah.
Especially, if you know what's, oh, wait a minute, these they did the boilers 10 years ago. Okay, might be time for another one. You can optimize the cost out, because had some friends I had on the podcast recently, and they said they have a tool that can cost out everything down to the nail of things. And I said, well, that's pretty impressive. What materials, and we'll plan out everything. And I said, well, that's like next level, next generation stuff, where, especially on a large complex project, naturally you still have to go through all of it, but the way they explained it to me is it'll be very detailed, and even if you change the colors in this room, then it'll adjust the pricing and change this and everything. It was there's just so many things, I think, that we haven't we haven't even thought of yet. I think it's pretty exciting. It's pretty exciting. So as far as like current projects, what are you guys working on right now in Dallas?
Yeah, let me answer that, but I still am kind of on this AI topic with you. So.
Sure. No, I know I can keep going forever with you.
I went to an IMN conference last week, and they were talking about AI, and for some reason, like, this random thought came into my mind that wasn't directly connected with the conference, but like, I'm a very visual person. Like, I would love to almost have like a 3D model of the property, right?
Oh yes.
You can see like physically, but then it will like light up. Hey, these places are having plumbing leaks, and you kind of see where they are, right? These places are having recurring issues on maintenance on X, Y, and Z. And then we can kind of look at it and say like, hey, what's going on at this location? And then you could click the actual
pinpoint. Yeah.
Click the unit. If there's like consistent unit walks that are happening with pictures every quarter, you can kind of see the condition of different things. I think that would be very cool to have to use AI to not just like because I get lost sometimes in spreadsheets all the time.
Yeah, we all do. We all do, unless you really love them. They can be, especially when they start to be layered on top of each other with a lot of different things. But just being on the boats and being a yacht captain for a long time, where we get to go hands-on, where we can actually, if there are leaks and stuff, a lot of times we have to think about like, okay, what's on the other side of the wall? What's further back here? What's causing this? And water and leaks, they'll go to the path of least resistance. So it could really be coming from almost anywhere. It won't go uphill, but it could be coming down from somewhere, further reaches where you don't really know. And if you have that 3D model and you know where these leaks are happening, you can almost anticipate where and when the issues are going to be, and then you can set up a better PM schedule for these things to get these things done, and then of course things are lasting longer. It's saving you money and better experience. You don't have as much construction crews out there for the residents, which is not usually a fun thing for the residents. So
exactly. So that's where I would like to see it. And in terms of like the alerts, right? Just like, hey, there's something going on here, and then like we can kind of model it in a little bit of a different way to see if we can identify what's going on. I would love to see.
Yes, that would be great, because then you could really cost out and anticipate where you're going to have these issues and plan accordingly. And if you aren't able to see those things, something small like a water leak could really hit you pretty bad if it's not addressed in the right way.
Absolutely.
A 3D model that would be next level for sure. But I'm sure it's not very far.
In the works somewhere.
Somebody's doing it probably. I would think so. I mean, people are doing just a whole range of things. That there was a guy I had because I have a meetup in Fort Lauderdale and West Palm Beach. A guy came and we started talking. Young guy, and he was having a hard time analyzing properties, getting the data and stuff from like Zillow and Redfin and all that. So he built an extension in Google to where it pulls out all the data and analyzes the property for you. And granted, this is a residential, because all that stuff is pretty easily available. So I looked at it and I said, wow, that's really great. Here's a young guy, saw a problem. He just he's like, well, I'm a software engineer, so I should be able to figure this out. And he did figure it out. And he's like, I'm analyzing 20 or 30 properties a day, like in an hour or whatever. And I said, there's just so many things like that I think commercial is probably going to be probably going to take a little bit longer because you're going to have a harder time finding the exact comps and stuff because
Yeah.
there may not be as much properties available. And if something's outside of 2 miles, it might not necessarily be
You gotta
a good existing
right
comp.
data. Yeah.
Yeah, and in some areas you may have only one or two properties like that. So will it be a fair assessment or a fair comp? Maybe not.
Yeah.
And if you're going across town, that's a totally different area. So you're you're in Dallas. The other side of Dallas is completely different from one side to the next. Sometimes even block by block.
Yeah.
It's
Yeah.
different. And Texas is known to be that way. And there's some parts are older, some parts are newer, and some, you know, I know in Houston there was no zoning at all. So in a lot of
Yeah.
areas, so you could have anything next to anything. But you got to take the good with the bad with that.
You do. And that's where the better knowledge you have and the more distinction, it's helpful. And I know AI will assist with that. But to answer your initial question, so what are we currently working on? So we have a couple of different goals. Our goal this year is to acquire at least 2 multifamily properties. So that's kind of our bread and butter is, B class, C class, 1970s deals, anywhere
And
from
above.
90 to 250 units in the DFW area. That's kind of our bread and butter. More specific in our buy box, we look for like the right submarkets. Like for example, you have some development deals in Cedar Hill. I love Cedar Hill. I love I love that area. So like, we try to focus on places that have very high rated schools.
Yes.
Kind of connects back to that. And then places that just have general durability better than the kind of the average for the DFW market. So we've located a couple of places that we really like, and then we'll just kind of vet through deals. So I think since December 1st, I'm sure we've probably underwritten close to 400 deals. It looks like we'll land a couple very soon, and then we'll start raising capital and getting ready to make those deals operational and get them to where we want them to be. So that's kind of on the multifamily side. We also, I think you mentioned earlier, we are starting a fund, Craft Income Fund. That is focused different. So multifamily is great, but it's not for everyone. I think people have realized this is not like the perfect thing for every single investor and whatever their needs. What I like about it, for me, and what I'm very knowledgeable about at this point, and I like it in terms of appreciation of my capital, but I'm not looking for that as my main kind of cash flow coming in, which I know is kind of what was sold.
Yeah, it can be long. Can be long time in between the cash flow, especially if you're doing a large value add project, or the rents aren't coming up as quick as we have seen. It's a slow and steady. It's a long strategy.
It's a long strategy, but that doesn't work for all investors, especially. I think investors a lot of time are pitched on cash flow. Passive income. You're going to get passive income to cover your W-2. I think, honestly, I don't think you're going to get there through multifamily alone. That's my personal opinion.
Yeah, I would agree, because sometimes with a larger value add project, like we alluded to, you might not be getting any cash flow for 2 years. And although it may accrue and build up over time, you still didn't have that. You have that lost opportunity cost of that not having that cash flow for 2 years.
Absolutely. So with that in mind, we are creating a fund called Craft Income Fund to allow people to invest in other alternative investments that meet other needs that people may have. So we will be looking heavily at triple net leases that make sense, that have kind of high cash flow that they're getting monthly. For those people that have those needs, we'll be looking at some other things that are alternatively on the different spectrum that may meet their needs. But we just want to make sure that we're offering something, not just multifamily. We want to make sure we have other options available for people. So that's kind of the second rung of our ladder, which, like I said, we'll be launching next week, and I'll send it over to you when we're.
Definitely, I'd be very interested to take a look because we're kind of on doing a similar thing. Although our stuff is the majority is development, and it's all built to sell. So you really no cash flow for a couple of years, and then you'll get the 2x multiple, 2-3 years of that kind of thing. And then the medical offices, we are discussing keeping some of them and putting them in a different fund, like you're saying, with a medical office fund, because it will be a fund of funds. So, and they're triple net leases. And are you guys doing any like private credit or anything like that for income?
Not right now. It is something that we've looked into. I think, because we're going to have, probably one or two multifamily offerings that we're doing. I think for now, the one we have one triple net lease that we vetted the operator. We've seen kind of how they operate, what they do, and we feel pretty confident that they'll be a good alternative, or not alternative, but maybe addition to the multifamily investments we'll have. So I think we'll start with there, and then once we get the ball rolling, we'll see what our investors need, and then what we provide an advantage for in terms of vetting to give them something they want.
It's always interesting to find out what the investor's appetite is for things like that. I know with the medical offices, like we were discussing earlier, it's much less complex than the multifamily, and it's less management intensive because you're talking about a triple net lease.
Yeah.
Where you're really just taking care of the outside and the outside of the building, depending on how the lease is structured.
Yeah.
But they're covering the taxes, the insurance, and they're doing the build out.
So
it is because we were saying earlier, I was like looking at it and I said, well, where's the rest of it? And I was like, oh, that's it. That's all that's involved really here. So, okay. That makes it easier for me to take a look at this, but we do like those, and the appetite for those filled up really quickly. Our team, I think they raised $5 or $6 million in a couple of months,
which makes sense, right? Like if I'm an investor and I just hear, you gotta wait. Having something where I'm getting some money in my pocket.
Yeah. Even if it's I'll take less if I get consistently, and for me, it's not really, because I invest as a limited partner myself as well, and that's the goal long term has always been to have enough of those to where, I'm not really working as hard to catch these returns and stuff, and it just makes sense that you're getting something every quarter or every month. And that's the goal, to have that to offer for the investors, because that way
it's best for them in the long run. Like you shouldn't be 100% in my opinion. I don't think you should be asset class.
I don't think you should be weighted heavily in any one. In just today's environment, although multifamily I consider pretty strong myself. I know you do as well, just because there's such a shortage, and there's just, I think we're kind of moving more towards a renter nation, at least at this point, with the home ownership kind of gap starting to get further and further, the divide, and less people buying houses or even coming in, and then also less houses being built. So
you hit the nail on the head. I think those combinations, right? Like interest rates are high, and I know for those of us that had when it was at 3%, it's hard to swallow buying a house at that.
And 6, 7, 8 now, or whatever you're having. I mean, it's like our personal house is in the 2s, so it doesn't even make sense to really even look at anything else, because it just it's under inflation.
Yeah, you're never going to see that anytime soon. So for people that didn't buy them, right, they're just they're like, oh, I don't want to buy at this percent, or they can't even afford it, and especially in
because if we were to do that, the mortgage would be double, easily double what we're paying, and it's going to be a tough thing going forward, because I don't see the rates really ever being down there again. I think we're going to be in a kind of somewhat of a quasi-inflationary environment for for
Yeah.
some time. That's just my opinion that, rates will probably have to stay somewhere around here. They might come a little bit lower, but they won't go into the twos and threes like they were before.
Yeah, and
I don't
even I
see that.
think it
Yeah.
seemed to like, and I mean, you kind of read in tea leaves that
Yeah. Crystal ball
the
stuff.
IRS was kind of saying, "Hey, looking back, we probably shouldn't have brought interest rates that low." Right?
Yeah.
They're seeing the effects now from those policies then. So I don't, I think they're revising their thought process that it wouldn't happen again. So
Yeah, I think the Federal Reserve, a lot of people give them a lot of grief and say they should do this, should you do that, but they've done everything in the last few years, especially this chairman has done everything that he said he was going to do.
yeah,
And you can't fault him for that because he has, for the most part, stabilized things, and he's he's using these tools that are lag indicators. So who's to say what it's actually, the timing can never be right
yeah,
because you know it could be 9 months or it could be 12 or 15 months for this to take effect because
yeah,
other things are taking longer to come online. So it's kind of puts them in a tough spot, but they've done what they said they were going to do, and they have stemmed inflation. We are seeing some unemployment rising a little bit, but for the most part, things have been okay, not great. I had somebody explain it to me one time when I was listening to their program. They said it was kind of, we hadn't really had a recession, but it was kind of a rolling recession where some parts of segments of the economy were not doing well and other parts were booming. So it looked kind of like a mixed bag. And now it's real estate, like multifamily is kind of going through that little
yeah,
tough period, but there's a lot of deals coming. But now people have tightened up with their, capital and everything else. So it swung the other way where 2, 3 years ago, people were throwing money at everything. And now we're kind of on the other side where the deals are coming. Like, there's tons, like you said, you looked at 400 deals. I mean, a lot of them are probably not very good, but
but it's changing like now. So like
yeah,
now, like just within the last couple of weeks, we like this pencils, this pencils, this pencils,
yeah,
this pencils, and there's not a lot of people at this moment in time trying to buy products that we
yeah,
are. But I think
yeah,
what you said, Scott, though a little bit earlier is like the reason why I'm still bullish on multifamily. So like I have some flips that I'm doing on the side. I'll have a lot of income. I'm going to put it
yeah,
in multifamily, and it's because of the development. The
yeah,
development of multifamily, especially in DFW, has plummeted
yeah,
because rising costs, labor issues, but the demand to live in DFW has not. So what
no,
we're going to see in 2 or 3 years is that if
a
occupancy
gap.
are 92, it's going to go up, and
Yeah,
prices are going to have to go up with it. And those economics are something that I like. So it's something,
yeah.
a weird opportunity where for me personally, like I will buy multifamily because I see it. But for those people that are a little bit far removed, I could understand their.
Well, I can understand the hesitation as well, but I've, you know, just being, because I'm also seeing like a lot of people have dropped out and moved into some other things instead, whereas because multifamily is starting to was getting kind of a not so great, name because a lot of sponsors and operators kind of in some hot water right now. Some are anyway, and some are doing really well. But
Yeah,
because of that, the bad press has come out.
yeah.
But
What do they say? I feel like it was Warren Buffett would say, like, right when the tide goes out, you see who's swimming naked.
you see swimming naked, and people have told me, and I've talked to a lot of investors recently, and they said, "Well, I'm on the sidelines. I'm going to wait and wait," and I kind of said, "Well, you're not going to really score a touchdown or score a points from the sidelines. Same thing, like I put it in a nautical perspective for me from being on the water and stuff is like you can't catch the wave from the beach. You got to
Yep,
be in the water. You got to
yep,
be in the water, and there's where like people like us that are in looking at these things all the time have a better chance of seeing these opportunities and people presenting and sending them to us.
yep.
Whereas if you're just coming in now, it's going to take you're going to have to go through probably four or
Yeah.
500
And you got
deals.
that learning curve. I mean, Scott,
Yeah.
how long was that learning curve for you where you're like, okay, I can do,
Still learning,
yeah,
still learning, but I'd like to think that I've learned enough to where I can make a decent educated guess on. And the biggest educated guess that I've made that's helped me the most is like you were talking about when you were talking about property management, is the people.
Yep.
Learn to gauge who to be involved with, who are our core guys, who are the, the people that you want to do business with and be
Yep.
partnered with long term, because that's the most important.
Yep.
Initially that's the biggest learning curve for me, because you don't know until you get involved with people, and how people react when things go bad is the most important thing. And you may not know that because
know
you
that
can't.
until you're there. Yeah.
Because when things are great, everything's everything's easy. When it's not, then that's when you see people's true colors. And we, I imagine yourself also. I know I have. I've been through it, many times with not the greatest choice for myself. I mean, wasn't that any of these people were bad or anything. It was just that we were not the right fit together.
Yeah. And I think I mean, when it's an actual emergency, right? When the house, literally in our industry,
is on
when the
fire.
house is on fire, or tornadoes coming through, or you got a winter storm where half the population doesn't have running lights. You can see like how people respond to that. You don't know until you see it, but some people rise to the challenge, and some people like just completely close and shut off.
Yes, it's that fight, flight, or freeze.
Exactly.
And I'm probably maybe I'm not one of the brightest guys, but I've been known, especially on the boats and real estate, I'm the guy that runs to the problem.
Yeah.
So maybe I'm a little hard headed or something, or maybe it's being a dad. I don't know, but
that's exactly. And I don't think I realized it until I was in those moments where I'm like, okay, this is where. But I assume it's probably similar for you when you're on your boat, where it's like, okay, things get quiet.
Yeah,
and then I
get slow.
just kind of know, okay, do this, do this, do this, do this.
Yeah.
Some people can't do that.
Yeah, I've had people come up to me later when we were literally in bad weather, a lot of stuff going on with the boat and everything. They said you started to get slower, like you were moving slower, but you got everything done, and like you brought everybody down, because there were people panicking and freaking out. But if I panic, I'm the captain and I'm panicking, running around like a maniac, everyone's done. Everyone's done. But I get where you're at, where everything slows down. It's just that mindset of, hey, we're going to get through this. You start to see the angles, start to see the solutions, and then you just keep going until you get it done. And sometimes you get there the best you can. Sometimes it's always a different scenario every time, and sometimes it's not pretty, but you always get through it.
Exactly. But yeah, you're right. You want to have those people with you that when the times get bad, because they will, they are able to kind of go fight with you. Yeah,
that's for certain. You want to have like a crew family, or your crew, your guys, guys and ladies that'll just fight through it till it's done, and then you hopefully laugh about it later.
Exactly.
Or at least look back on it and go, oh, well, because I've found a lot of times when you look back on stuff like that, you go, it wasn't, when we're in it, it was terrible, but it really wasn't that bad.
Yeah. Yeah, those things shape you, I think, for me. And then, like I said, that's kind of from my background too, right? Because like those first 3 years in an orphanage, like where it's like, where there's a lot of chaos, like I just kind of get calm and I'm more used to that. I think like on a very like subconscious level, that I can just kind of get quiet and figure out, okay, what's the next thing that we got to do right now, and then just kind of go through those steps.
Yeah, I know one thing that's also helped me as well is I do a lot of breath work, and I do exercise and stuff too. I think if you do those things all in addition to, just breathing and thinking things through, if you force yourself to stop and take a breath, or stop and take a walk, step away, your brain gets clearer, because if you got the blinders on and you just continue looking at it, you're going to miss, or you're missing something. And how
Yeah.
many times have you been working on something where you're just buried in it for weeks or what have you, and somebody comes along and goes, "Oh, just do this." And that is so upsetting, but it's like, okay, well, it's done. Why
Yeah.
didn't I find this person like 2 weeks ago? Year 3 or whatever. We've been working on something for a long time. It's happened to me many times, and that's with age and experience. A lot of times,
Yeah.
I've found that when I am battling myself over something, just step away and make somebody else look at it for a second.
That's
Sometimes
what that's where I get in trouble, because like I'm someone that if I read a book, it clicks, right? So my wife could tell me to do something 10 times and I'm like, oh, whatever. And then I read it in a book and I was like, babe, I came up with this great idea. We should do this, this, and this.
She's like, I've been asking you to do this for 10 years. Oh, yeah, I know. Well, we all have our different, unique ways of
Exactly.
doing stuff, how we process. Like you said, you're visual, and if you read something, you know
Yeah.
it. And that's that analytical mind where me, sometimes if I look at it, I can figure it out. But I did not like high school and grade school, stuff like that. But I did like university because it brought me to where I was around a lot more different kinds of people. Kind of opened my
I think that's
mind up to the world,
Yeah.
And like I said, wow, I didn't know people can do that or doing these things. And it was the same thing with real estate and stuff that I didn't, the exposure, the more I learn, the more people I meet, the more opportunities and options that you see, that it gets easier the more people you meet.
For sure. It's so weird though too, right? Because it's like I feel like growing up, we were kind of told you got to do your work and you got to, like you're graded on your performance, but it's such a collaborative effort. And I still need to make
team projects.
Yeah.
Yeah, it's group projects, where you have, there's where having a good team, like we're saying, like if you have somebody come and look at it, if you have a good team, all eyes need to be on all things, so there's cross check and cross references stuff, because we all struggle at times and there'll be some overlap, and that's what it takes, well, this has been really great. I really appreciate you coming on, and I really am looking forward to seeing your fund and everything, seeing what you guys have going on. And I like your process of, well, we're going to do 2 and then this. You didn't say like we're going to buy 2,000 units. We're going to do this. Like no, we're going to buy 2. We're going to close them out. Start this alternative investments. We'll do 1 first. Now that just shows, that comes with experience of, hey, we're going to be doing this. But for other people that want to reach out to you and find out more about what you're doing, how would they connect with you?
So a couple different ways. So if you want to reach out in terms of our ebook, I'll send you a link, Scott. Maybe that's the easiest way to our ebook.
Okay.
So that if anyone, it's all about alternative investments. So not family focused. It's just, hey, this is the world of alternative investments, and this is how it can impact your portfolio in a positive way. I think regardless of who you are, understanding alternative investments is the right thing to do. And then also to have them, I believe personally, is also important. So I'll send you a link to that, Scott. If anyone has,
put it in the show notes.
And then my email is misha@craftcapitalinvestments.com. Feel free to have anyone reach out to me with any questions that they have. We're happy to put them on a mail list if they're interested. We don't really, spam people, but like I said, we're going to have some multifamily opportunities that we think will be exciting, and then we'll have the fund coming up. So we'll have some different informational things that will be good for people to potentially learn more about, or if they have questions, I'm happy to answer any questions that they have.
Well, like I said, I really appreciate you being on, and if you guys want to find out more about him, feel free to reach out to Misha. And this is the Yacht Captain Investor Podcast. I'm Scott Kidd. Please follow along for more great conversations like this, and we'll see you next time.